All right, folks, welcome back. So, we're going to do a little bit of a review, and I'm going to teach you something that comes right out of the book of ICT. I had to use those three letters, unfortunately, this morning. But my algorithm, my secret weapon, if you will, when I'm looking at price action and engaging a price, is what I have dubbed Enigma. Now, I am Enigma. It's not something that it's out there where you can copy it or purchase it and someone else coded it. No, that's not. We're not talking about that. Okay, the real OG here is Michael. Okay, and that's kind of like my working name, Enigma. So we have a few things to cover, but I'm going to start with the teaching part first, and then we'll just end it with kind of like a little bit of a review. Okay, I'll try to do this inside of 30 minutes. So we'll see if that's going to be successful or not. And the last video I did, I said I wasn't going to keep you too long. I ended up keeping you an hour and 20 some minutes. So that doesn't usually afford the YouTube servers to translate. And I know some of you are upset with me about that, but you know, it's going to happen sometimes. I mean, the old man just gets on a roll and it is what it is. I can't turn it off. It's like a fire hose. Okay. So if you watch the last recording I posted just recently, I covered a little bit of detail around the dollar index. Now, obviously, on the 7th, that analysis video I posted on June 7th, 2026, this was the last candlestick on the daily chart for dollar index at the time. And I said, we'll see if it wants to come back down in here, use this as an inversion fair value gap right there, and then take another run up at this minor buy side. And then halfway point is consequent encroachment between this level and an old high, which is over here. See that? So that's still the next draw on liquidity. But when we were looking at live price action here on Wednesday, while we were right up here, okay, while it was booking price live right in here, I was outlining why it's okay for you to take profits on your short euro dollar and your short pound dollar and be content with this run on dollar index. Why would I say that? Well, we had a nice run from this area here, perfectly delivered. We only had one down close candle here, and it was very small bodied. So it's really stretched out. And this is the target. It's an old high. It can't hide from you. It's there. Okay. But when this body of this candle was all the way up here and it was full on body near the high, I was talking about how there's nothing wrong with you collapsing that bullish idea for the week and taking your profits on euro dollar and pound dollar. What is in price action at this moment here that escapes everyone else? I'm going to include everyone here. The list would be very, very long if I went from an itemized list straight down. But I promise you this, what I'm going to show you, order flow, level 2, footprint, volume profile, GAN, Elliott wave, pitchforks, torches, snares, whatever you want to use, okay? Trend lines, moving averages, all that business. None of that's going to tell you what I'm going to show you here, okay? And this is how I look at price action. I look at things in terms of measurements. I look at them in terms of where the algorithm will absolutely interface with the marketplace and the delivery of price. So when we suspend our disbelief whether there's an algorithm or not, okay, I'm going to invite you all to hold that view for a moment. Now, some of you, it's not going to be hard for you to do that because you already believe that. You think it's buying and selling pressure. And while that's cute and very amusing to me, I want you to think about what I'm about to show you, okay? And the degree of statistical probabilities for these things to occur if it was just random buying and selling pressure. Okay. If we zoom in, I'll make this a little bit more prominent. Build this up a little bit so we can see the wicks, we can see the bodies, we can see any kind of separations between the bodies. So there's a volume imbalance. If not, all right. So this is the draw on liquidity up here. This is what I told you on the 7th of June. Actually, before that, but on June 7th, that was the last point of analysis. And I broke away from you for a little while and left you to watch the daily chart. And we cleared the minor buy side. We cleared consequent encroachment, which is midpoint, which we'll show you real quick. Just roughing it, not trying to be perfect about it. Okay. So we hit consequent encroachment there or event horizon. So between two pools of liquidity, an old high, split the range in half. We closed above it. Okay. That gives confidence that we're likely to draw to this level. It's not a guarantee. It's not a panacea. It's not a be all end all. It's not an absolute. It just, when I see that type of thing, to me, I feel a little bit more confident that it's going to trade higher. And it did the very next day on Wednesday. But then it traded up to this level right in here. When in the last recording I did this week, I was talking about how it's okay if you close out your long idea on dollar index and take some profits on your euro dollar short or your pound dollar short. Let me show you what you don't know. This is the type of stuff you see me when I'm entering in certain trades, I'm taking profits and targets are getting hit and they're like really, really close to the high tick of the market. And you just recently saw that in the NASDAQ over like 1,200 handles. Hello, holla. So we have this buy sign and balance, sell sign inefficiency here that formed on Tuesday of this week. Okay. And it's in the direction of the terminus or target I outlined for us to be observing, which is that 101.977 level right here. Because we've had a nice run and we only had one down closed candle since the series of that move off of that inversion fair value gap there. This is the only down closed candle we had. So it's reasonable for it to slow down or run out of steam, if you will. But just because it could do that, it's not enough. I have to ring in some science and measure some stuff because around here, we believe in a matter of technical science. We don't believe in randomness. We don't believe the markets are random. We're not surprised when markets behave a certain way. And we don't believe in buying selling pressure. So if there is no algorithm, pray tell, how is this going to work? Okay. There are two distinct approaches to how I teach. Okay. I teach an extreme and then I teach the low hanging fruit objective. So in between, that's where the story is going to be the clearest, which is why consequent encroachment, mean threshold, when we're watching real order flow without looking at the number of contracts that were bought and sold at specific price levels, because it doesn't make a difference. Yesterday's weather with sunny weather and 82 degrees and low humidity absolutely has no bearing on today's weather. Zero. It's in every legal disclaimer. It's in the bottom of this video also. Past performance is not indicative of future results. So just because so many people had orders executed at around a particular price means absolutely nothing. It just records history. That's wonderful. That's absolutely wonderful that we can see how many people bought and sold at a particular level. It's wonderful. Now, it has no bearing on the future prognosis. Now, it has no future prognostication over price. And to subscribe so, that's a religion. And we can argue and go back and forth about that. And some of you are convinced that your religion about what you see in price is real. And I'm going to smile at you and think it's cute. And you're going to look at me and say that I'm foolish because I think there's a central algorithm that runs all the markets. No, there's one algorithm that's implemented in every individual market, and it's using the same logic. Now I'm gonna show you something here, okay? And I want to remind you that you do not need this to trade with what I taught and find profitability. You don't need this, okay? But this is what separates me from everything and everyone else, okay? It's a diametrically opposed position that I hold with everyone else. And all of you that are listening to me are either here because of morbid curiosity, or you're here because you want to subscribe to the viewpoints that I'm promoting and sharing. Either or, it's fine. Okay. But I want you to think about the the degree of statistical probabilities for this to occur. Okay. When I first started teaching fair value gaps, if you recall, I didn't include volume imbalances because it was a graduated revelation to you. I'm not trying to teach everything at one time because number one, it's a lot of information. It'll bog you down. And look at what they've done with what I've already taught. They change things. They try to twist it. They try to create something for their own clout, their own attention seeking. They want to seem like they figured something out. And watch and see. You're going to see people come out and say, I've known about this. I just didn't want to tell anybody. It's foolishness. But I promise you, Gann and the whole list of everyone else out there has nothing on this. Nothing. Nothing. Okay. So when I taught imbalances and inefficiencies in price, I told you to look at first the wicks. And then we graduated to then looking for when there's a volume imbalance. A volume imbalance is something like this right here. If you look at the close on that candlestick, you see that? It's 100.997. So the open of the next candle needs to be higher than that to be a volume imbalance. So anything above 997, well, look at that. It's over it. 101.005. That's certainly higher than 100, right? So there's a volume imbalance there. So in classic terms, when I first introduced fair value gaps, this is what we were seeing. Okay, you see that? And then eventually, when I felt it was merited, I gave you all a deeper perspective in price action where we include the volume imbalance, where we would discount this short term wick high and go right down to the candlestick's close. See that? And that became the fair value gap. Now, that's two measurements to get a inefficiency defined. But now when we're going to use these inefficiencies, we can now project them into the future and determine very specific price points in an unrealized dealing range. What was that? That's a lot of word salad there, isn't it? So if we are bullish, okay, and I'm going to make the case, and it's going to be a stretch for some of you to believe it, but on the 7th of June, I told you that I felt that we were going to try to gravitate towards this level on the dollar index. Therefore, putting downside momentum in play for euro dollar and pound dollar. So if dollar's going to go up, that teeter-totter effect, if this is going up, it's going to allow euro dollar and pound dollar to go lower in concert with the appreciation higher in dollar index. So I'm looking at the time and I'm already getting too long winded. So I got 15 minutes to wrap this bit up and go into the review. I know some of you like, just keep going. We like the long ones. I don't want to make this one a long one. So I'm being very conscious of it. But this day here, while we were right up here, I said that it's good for you to take your profits. Now I know some of you are short on euro dollar. I know some of you were short on pound dollar. And I know some of you made lots of money doing that. I don't want to see it, so stop sending it to me. Okay? That's your business. It's not my business. But I'm also not trying to be the oracle. So don't use me as the timing element for you to get in or get out of your trade. Okay? Because then I'm managing your trade for you and you're not getting experience by that. The only thing you're doing is tethering yourself to my opinion. So just like we have two ways of measuring and defining the imbalance, when we do measurements for targeting, there's a low hanging fruit objective, and then there is the extreme. Okay. So I'm going to teach you something in regards to fair value gaps that Chris Laurie never heard about. The guy he learned from never learned about. Everybody out there that does everything else in price action. Okay. Mr. Al Brooks. Okay. You're not going to see him teaching this stuff. Okay. It ain't there. Okay. And I want you to really pay attention to this because this is why my executions are laser precision. This is the reason why these types of things, this isn't all there is. And you don't need this to make money using my concepts. But I'm just doing this to kind of like stimulate your thought process about what it is you're learning here and why you should not fear these markets because they're absolutely rigged. They're 100% rigged. And if there was no evidence to that, what I'm showing you week after week, month after month, year after year, it wouldn't hold up. But yet it does. We're going to make this a little bit bigger. She never said that. So the open of this candlestick starts this price run here. Okay, so it's candlestick number 2 in the fair value gap. So we're seeing the protraction higher, this displacement above these highs here, this run. Resist the temptation to call that an engulfing candle, okay? Because engulfing it doesn't really adequately describe what's going on. It's displacing. It's leaving an area where this candlestick closed. We opened higher. So what did it create? A gap. Opening range gap. Trades lower. And it rallies up because it's drawing towards this level up here. This is the draw. This is the big magnet in price action. If I'm going to measure the influence for the unrealized dealing range, and what is that? The unrealized dealing range is when this candlestick starts and opens higher than this one, it trades down and starts to rally up. Sometime during this day, price was sitting around here. Okay. I'm trying to paint this for you. When price was sitting right here, and we'll say it like this, price was essentially around there. Okay. And this is where on the 7th and before that, earlier in the year, I told you we were going to go towards this level in dollar index. Between this price point or any time during that day, whenever you were looking at it, between that price point and say that was the highest high it had formed for that day so far. So in other words, anything above this line hadn't yet formed. From this point here up to that level, this is what I call an implied dealing range. It's an unrealized dealing range. It means it has not traded there yet. We have an opinion that's going to take us up here, but we have to wait and submit to time. So from here to here, we can start getting an idea where price may reach for. Okay. So this has taken out the previous day's high. So it's an almost guarantee that this is going to be the next run higher. So start where that candlestick opened for the day, right there. Okay. So now from this candlestick's open all the way up to this high, that's an unrealized dealing range. We suspect that price will go there. See, your volume imbalance gives you clues on how to measure certain things. Order flow doesn't determine these types of things. Elliott Wave isn't doing those things. Supply and demand isn't doing that. Okay. Larry Williams isn't doing that. Okay. No disrespect, Mr. Williams. But the point is, this day was Wednesday. It was literally, part of a sustained price run that got close to our target, but we're on hump day, Wednesday. And we could see a midweek retracement or reversal. And because we hit targets on euro dollar and pound dollar at the same time this was occurring, hello, what up here at this price is significant? Well, let's take a look at the Fibonacci now. This is simply just math, folks. Okay. Math applied to algorithmic principles. If there is an algorithm, and I know we're all supposed to be believing that there isn't one right now, just for the sake of the discussion in the lecture. If I plot that fib from the low of this candlestick body, which is the opening, and drag it on up to the low of this candlestick right there. See what I'm doing? I'm measuring the point at which this displacement begins. It's part of the power of 3 of that day, carried over to the very next day. This candlestick opened here, dropped down a little bit, and then from there, it showed its willingness to want to go higher. So there's discount sensitivity on that low. We started on the power 3 element here, and I already know some of you you're already churning the channel. You're already saying this is too much, and that's okay. But I promise you, there's charter students right now that are drooling. And trust me, I'm going somewhere. This low from that candlestick's opening price, that right there is consequent encroachment. That's not concerning. That's not the focus. But what we want to do now is add a level right there. What is that? Negative 1.25. What's the 25? We're assuming that this run here at that open to that low, that range projected in the future, 1.25, that takes us right about there. So here we have 101.795 right there. And then that's the low hanging fruit objective on this measurement. Okay. We have to now get the extreme. What is that going to be? Well, we have a volume imbalance. It's lower than there. Okay. So we have to use the point at which the day closed. So the body tells you the story, the wicks do the damage, right? So we're going to go to that closing price to open up that fib a little bit further up. And there you go. So now we have 101.805. Okay, you see that? Now, watch, folks. In the recording I was showing you last time, while Price was moving around, meandering, and Caleb sitting right next to me, I was explaining to him that this is going to show a strong likelihood of retracing right from this price level. Now, okay. So now if we have a fib anchored to this 80.5 down to 79.5, make sure it's showing on the numbers. Okay. That off. And this right here, we're going to put it as a blue line. Actually, make it a little bit darker like that. I'll extend it out a little bit. It's not too many. All right. So you have a projected portion of price action using my fair value gap, using power 3, using the bodies and the wicks to determine a low hanging fruit objective and an extreme projection as well. And between the two, we can measure that out. Now, trust me, I already know what some of you are thinking. How did he figure this out? Right, because if it wasn't him tapping me on the shoulder, say, look here, it wouldn't have happened. So all the glory goes to him. So don't call me a genius because it's all coming directly from him. Nobody else out there is teaching this, folks, because believe me, if they were, I'd be pointing to them saying, hey, check this guy out. Okay. But apparently I'm the guy. So here's consequent encroachment of those two levels. Look at the high of that candlestick. As I was telling you in the recording while the analysis was being talked over live, price action, not market replay, not form fitted, not cherry picked. Okay. right up in here, the high comes in at 101.8. What's the consequent encroachment level? 101.8. Now you're going to tell me, folks. You're going to tell me, okay, Mr. Order Flow, Mr. Level 2, Mr. Volume Profile, Mr. Elliott Wave, Mr. Gann, that all the buyers stopped having an interest in buying there. And then the sellers finally got interested at that price point and sent us down into the close of that day. That's what you're gonna go with? That's what you're going with, right? See, folks, I want you to understand something, okay? When I show you something, when I'm talking about things, there's scientific data behind it. Just because you don't have it in your hands doesn't mean it doesn't exist. I'm not obligated to teach this to you. But when I see comments and people email me, okay, and they do these big essays that I don't have time to read, okay? So I appreciate you sending me these long-winded books of opinions, and you titled the email about there is no algorithm and the markets are this, that, and the other thing. Okay. Look, there's people out there, all kinds of different religions. Okay. You're welcome. It's in our United States, we have freedom of religion. Okay. You can believe whatever you want. You want to believe in spaghetti monster? Hey, it's your business. But in the markets, there is an algorithm. It is in every market and it's controlling price. It's the delivery mechanism. Now, you can get all worked up in a frenzy about wanting to defend the opposing view of that. And it's not important to me. I could care less. But I want you to understand that there's nothing like this out there. And when I look at price action and I'm seeing certain things, when I'm looking at price, and this is on a daily chart, folks, this stuff exists on all time frames, all time frames. And the only way that can happen is if it's scripted, coded, and someone knows what's up. Now, just leave that out there for you to figure out what that might mean, what it implies. Hey, I'm sure there's a Netflix movie in there somewhere. But the point is this: the market did, in fact, retrace right where I was saying it was going to likely do it. And the science behind why I said it was a good idea to do so. Remember, I'm doing it before it happens. I'm calling things on the daily chart before it happens because I got so many grievous messages or whatnot belly aching to me about how I can't watch your stuff anymore because you're only talking about intraday charts. Okay, I'm not trying to coddle all of you. I'm trying to show you that the lower time frames afford lots of opportunity for you to practice and study because the same thing that you're seeing on a 1 minute chart or a 5 minute chart is going to form on a daily chart. It just takes a whole lot more time for that to occur. Once it obviously delivers, you could be weeks or months before it's completed. How long are you going to stick with that exercise and trying to learn if you have to wait that long for the feedback? You're not going to stay with it long, folks. I know because I couldn't do it either. So I fell in love with the lower time frames because it gave me lots of practice. It's like the shooting range. You go to the shooting range, as many bullets as you bring, that's how many shots you got. Well, if you can't bring all that many shots to the daily chart to do certain things and practice on, you're relegated to just simply looking at hindsight data. And at some point, you got to stop looking at simply hindsight data and market replay, and you got to stick to the hard right edge and figure it out. And how can you practice that on a daily chart any faster than 1 day at a time? You can't. Okay, so that's the reason why I'm on the lower time frames. I teach on the lower time frames because it's advantageous for you. Even if your model isn't going to be an intraday model, it's useful for you to learn that. Okay, so I've already used up all my time. We got 7 seconds left, and I'm going to have to go over time now. But I just wanted to toss that in there. Okay, you hear these people say there's always been imbalances in price. I didn't invent imbalances, folks. I codified the logic around how it pairs up with algorithmic price delivery, and I codified that. Mr. Jones himself, here I am. Okay. So whether you choose to believe that or not, I could care less because there's nobody else out there telling you about this stuff before I did. And I'm answering people when I say this. It's not me saying it because I love myself. Many of you come here and you watch a video and you think you're an audience of one. You're the only person I'm talking to. Like nobody else has a question. No one else has anything ever sent to me. No one has a concern. No one has uh, a doubt. When I'm talking, I'm addressing and responding to people. I'm not going to pull up their email and show you their novel they wrote me. Okay, it's pointless. Who cares? Okay, but I am going to address it because this person has a little bit of an audience, and I'm sure they probably are either being warmed up to that same approach or that viewpoint, or they're trying to attempt to do so with that crowd of people that's interested in what their opinion is. So, uh, again, just look at what we've done since the 7th of June. Beautiful run off of that inversion fair value gap. There is, for the support and resistance crowd, there's an old high back here, but it didn't trade there, did it? Didn't do that. But it used the logic with the bodies supporting the idea of that becoming an inversion fair value gap because it started as a volume imbalance and then it delivers buy side here and then sell side delivery and then leaves it. So watch what happens. The volume imbalance changes its characteristic to a fair value gap. Even though there's no bodies here, it was deferred at a different later time. Buy side was offered. That means the price simply was allowed to trade from its lowest point, which is this candlestick's close, to this candlestick's close. It traded from the low end of it to the high end of it and then back down. So we have up, down. And then when it leaves that range, this becomes a balanced price range. But we use it through the lens of a fair value gap that was down because we opened lower here, but the body stops on that close. So this separation between these two candlesticks, we measure that and we call it first a volume imbalance. But it was created by down delivery. Okay, so sell side delivery, not liquidity, it was dropped lower when it's formed. Over here, it goes up and down and then leaves it with this candlestick there. So it becomes a balanced price range. And we simply use the logic of it would have been, if this would have been like one candlestick bridging from here to here, this would be a sell side imbalance, buy side efficiency, or fair value gap. If we trade above it, like we do here, naturally, based on how I teach, that would be used as a inversion fair value gap, which is why I labeled this whole business on the 7th of 2026 of June of this month, gave you the analysis on here. It would go down here, go here, and then draw towards this. But it does not need to on Wednesday when I was doing that recording, when price was still moving around and my son was sitting here saying, hit him something good today, Dad. Show him something really impressive. So maybe some of you missed it. Maybe some of you said, okay, well, that wasn't a big deal. Maybe this isn't a big deal. Okay. Um, if we go into Eurodollar real quick, see if we can get this done in less than 12 minutes. All right. So here's the business here, inversion fair value gap. The market dropped, hit our target here from last week. I told you that we want to see this traded, not necessarily this low here last week before the week closed. We ended up getting it here on Friday last week. See that? We got that target. Then we opened up here, and then right from Jump Street on Monday went Monday, Tuesday, Wednesday. Bang! There's the day when I said take your profits on shorts on Eurodollar and pound dollar. And then we had this little bit of a whipsaw up in here. So what I'm measuring there is the wick. This is a discount wick because in deference to where we are on the candlestick itself. But when price is below it, this is a premium wick. So you have to know where at market price, where are you in relationship to the PD array or the wick in this case. So consequent encroachments here. We traded up and just fell short of that. You see that? We hit the 0.375 level at Octant, and then look at the nice repelling away it did, and then closed back below the low I told you that would reach for on the 7th of June, 2026. So how about that? How about that? Pound dollar. And the guy goes on in the email about how I'm only looking at NASDAQ and my stuff doesn't work in other markets. And he had a long-winded thing about how my stuff doesn't work in gold. And come on now. I don't know where you've been, but it's still working. Here's pound dollar, uh, SIBI, which we'll see it reclaim that. We talked about all that business here. I thought this would be an inversion fair value gap. It used it here. We had a small little gap. It used that. Look at the bodies respecting the consequent encroachment of that midpoint. And then we drop down into our target. And then the next order of business would be, should dollar continue going to our target, pound dollar would reach into here. And look at the last recording. It'll show you why this is a blue box. I'm not going to go into that and save some time. And ultimately, if we get some extrapolation on the upside on a dollar index, relative equal lows, that being the lowest one here for pound dollar, that's a good target. Anything more than that, I'm not willing to go beyond that. But near term, we're looking at this. All right, so we're going to look at gold. All right, so here's the target I gave you for gold. We would look for that low. We hit that on, wouldn't you know it, Wednesday also. And then we had a little bit of a retracement. We're inside a small little fair value gap there. So there's another target using this SIBI. We were looking at gold back here, saying take your profits. Look to see if it fails in here. Inversion fair value gap. And it came to fruition, went lower. We were looking for lower prices and then finally got it. Okay, so enormous amounts of opportunity here in terms of what could have been yielded to you as a short holder. Let's go into silver. It's kind of like a victory lap here today. That's all it is, folks. And then we talked about silver. Silver went in here, and then this was a $60,000, or actually more than $60,000 per contract if you were acting on this in your demo account, of course. And we were looking for that low, and inside this, buy side and balance, sell side and efficiency. And go back and listen to the recording on the 7th of June. And also the most recent one I did just past this week here. And we dove down into that handsomely. Look at the consequent encroachment of that, hit that. So there's another target. So big money, man, big money. I'm content with this. Obviously, until this is changed, I'm not looking for a low form and going higher. I'm looking for it to continuously move lower, especially if dollar index goes higher. If dollar goes higher, gold and silver and oil and all the other markets are going to continue going lower. And speaking of oil, let's go over to that. Another victory lap here. Remember, this stuff only works in index futures, right? That's what the guy was saying. So here's over $20,000. And I said this very day, fade what our president's saying about the wartime stuff, because they're fronting like they're going to do something and they know that it's going to have an impact on the marketplace, and then they're fading you. Okay. So it's a trap. And that's what we've seen a couple times so far this year. And people are hip to it now. So now, because a lot of people are hip to it, it probably won't have such a importance or role in the future. They'll change their strategy. Let's put it that way. So over $20,000 per contract in there. That was our initial target. And then I told you in here, you don't see it, but watch. Ready? And boom. That was the next target. You got to watch the last video to see it. Okay. So look at how it hit consequent encroachment there of this volume imbalance. Beautiful, beautiful, beautiful. And then we had other levels in here that would clear these relative equal lows. But again, just watch that video. I'm content with this. This is rather handsome. So right there, good grief, over $150,000 in potential demo profits if you would have taken these ideas since the 7th of June. And mind you, this is for free. I'm not charging you anything. And the price ain't going up. So that's pretty good, isn't it? Let's go over to, what was the other market we were looking at? Let's take a quick look at Bitcoin. So here's Bitcoin. Our target down here went to that, went below it. Just like everything else, it's having a little bit of a retracement in here. I'm not bullish on this market. I think we got our target one. Target two is consequent encroachment, which is this low to this old low, which I'm not going to scrub back. If you've been watching my videos, you know what this level is. Half of that is right there. So that would be target two, originally I had this as target 2, but when this low formed, I changed this to target 2, which is halfway between this low and this low. Now this is target 3, target 4, and rounding out the best support level there is here around 0. So we're going to wait and see what happens. I did a short in a paper trading account. Some guy says, "This is my signal." When I said that Bitcoin was pretty much abandoned all hope. So he says, "That's my signal," and that was right here. Okay, I'm giving you your 5 minutes of fame, by the way. But in here, I went short near the high end of that, and then wrote out that day's low. So you didn't see any kind of executions on that guy though, but you seen mine. 25,000 paper bills. How about that? But I'm still learning Bitcoin. I'm still figuring it out. If I ever figure it out, I'll talk to you about it. But right now, it's a little confusing for me. Let's look at the Dow. And now this hooker here, she continuously does whatever she wants to do. Okay, the dirty 30. I understand there's some of you out here that you absolutely love this indice. I loathe it. I can't stand it. I look at it as a disease infested mangy mongrel. Okay. So this thing has been allowed to go higher at the same time. Let me show you real quick. We're going to adjust for contract rollover. See that? It still makes a higher high. You see that? It's going to be important in a moment. So since I could care less about this, and I just want to show you that by contrast, the Dow has gone up higher. And even if you impose the contract rollover feature by hitting this tab down here, whether on or off, it didn't make a lower high. Okay. But now we're going to go into ES. ES, here's this one. And you see this high, we went slightly higher there, but watch. It's not there. It's not there. Okay. So this low I mentioned the other day on X, when I was specifically talking about it from NASDAQ. We use all those levels here so far. I said that this could act as a um, inversion fair value gap. Why? Because it first starts off as a volume imbalance, but it was delivered with a buy side delivery. In other words, the next candle up that created the volume imbalance where there's no bodies touching these two candlesticks. That means it's a bullish PD array. If the market's bullish, it's not up here. It trades down through it. And then we trade another one here, higher. And then we trade down, and then we leave it again. So this becomes a balanced price range, but then we use the characteristic of an inversion fair value gap. So if it starts its original utilization as something bullish, if it's changing that and the inversion aspect kicks in, that means now it's going to be bearish. So we're going to see it treated as resistance. You see that? And then we sold off. So one caveat here, okay? This is what makes this very complicated. And it's not going to be clean. It's going to it's more likely to fail. Okay, so this I'm telling you this in advance. That way, if it doesn't deliver, I'm showing you why it doesn't. And there's a whole lot more reasons to know things like that and have more importance around why something shouldn't be done, like a specific trade or following a specific logic around my concepts or somebody else's stuff. Knowing when not to do something is the most important thing. That's one of the best rules you can have. The best rules you can have, because it's not the people that make a lot of money because they win a lot. It's because they don't lose as much as everyone else does. And I'll say it a different way. Control your losses, and your wins don't have to be stellar, and you can be profitable. Big money can be made by gamblers. There's lots of people in the trading industry, lots of them. Some of them have YouTube channels, some of them live stream, some of them have pretty respectable followings. But they're really not traders, they're gamblers. They put extreme levels of leverage on just to hope and pray that the outcome comes in their favor. But then they blow up a lot. They go through a lot of resetting accounts, horrendous drawdown. I'm not trying to capture that in your imagination and say that's what you're striving for. Nobody should be going out into this industry trying to do that stuff. There's a better way of doing it. If you know what you're doing and you can control yourself, it's about controlling the losses. You can't keep them from coming, but if you know how to avoid certain things that other traders would tread inside of and fall victim to that snare, that's the real secret. It's not losing as much as everyone else does in frequency and the enormity of the loss or drawdown. So if you look at this down close candle right here, see that? That's the largest one. So you had change in the state delivery there because look at the body there. See that? I'm not looking at the wick because we're going to come into that in a moment. But here, just from order block only, this is the change in the state of delivery right there. See that? But just to the right of that, we have this enormous wick there. So whenever you have that, just like a gap, wicks take precedence. Why? Because they're balanced price ranges. It opened the wick high here at this candlestick's close, down to the low, and it came all the way back up to that same price point. So it did both directions in this portion of that candlestick, the wick. Okay. So now what we're looking at is the consequent encroachment of that level. It needs to close below that. Until it does that, this is still not high probability to go to where I said it was likely to go, below these lows. And the low was based on a NASDAQ low. But just be mindful that this is ES and it had a little bit more willingness to want to go lower than that of the NASDAQ candlestick speaking, by the way. So we're going to look and see if that's the case. And then we'll go over to NASDAQ now and wrap this video up. I went over my time. So same bit of business here. It's a contract adjustment for rollover. Same thing here. Suspension block. We have a volume imbalance at the low, volume imbalance at the high. So this one candlestick is being suspended between 1, 2 volume imbalances. So if we measure that and treat it as an inversion fair value gap, the bodies here couldn't get up to here. Once we had this full run down there, bodies are staying in basically the middle of this. And then the next candlestick on Friday, we opened, traded up, couldn't get the consequent encroachment, and dumped lower, cleared up these lows, and traded down into the upper quadrant of this wick. Same bit of business here. We want to see a close below this level here on NASDAQ. If we get a close below that, then I'm confident that it's going to reach the target I told you to outline on X. It was, what was it? 5 something, 513. I think it was the level. I don't know. You have to figure it out and go back and look at my tweets. But I said basically it's these lows here. It was me, just basically roughing it, looking at it. But it's 28,517. So I was picking something just below that. So I think, if I'm not mistaken, I think it was 513 I posted. But whatever, just use that low. One tick below that is enough for me to be right. Okay, that's all I'm saying. But the if it trades down here and closes below this price, then this is a very strong candidate for it being taken out. It's a relative equal low. Same thing here, lower high than this one, but watch when we go back into that. You see that? So it's very useful there. You see how I'm slowly teaching you more and more things that no one else talks about? This little tab down here holds a lot of secrets, okay? The first thing I introduced to you is I like toggling to see where the volume imbalances are. And then I taught you how to find targets and how to find the next stage of targeting when that lower threshold or low hanging fruit objective is met. And now you're seeing that you can see SMT divergence. See that? Isn't that neat? So it's a matter of perspective and when to look for something. Why the tool is useful? Because if there's no use for it, if you're not painting a wall, why are you grabbing for a paintbrush? Think about it. You're not going to grab a screwdriver if you're trying to paint the wall. And so many times in trading, people have all kinds of indicators. They have these little gimmicks, and they don't really have a solid reason for utilizing it. They just try to use it all the time. And that's unfortunately what happens to my new students when they come to me. They look at all these videos, 800 plus or whatever it is. I don't even know how I lost count. It says it on my YouTube channel. Just go over and take a look at it. Um, and by the way, I'm going to ask you for a favor at the end of this video. Trust me, it's not going. I'm not asking for any kind of money or anything like that. But people look at that number of videos and they think, "Ain't no way I'm going through all that. There's no way I got all the time in the world to do that." But I think what happens is when people start taking it a little bit serious and say, "Okay, I want to go through a mentorship." You can start with 2022, okay, and just go through. If you go through 2022 and you like that, and you feel like you got a little bit of a baseline, go right into the 2016, 2017 paid mentorship playlists. That was what I charged money for. People all around the world, had a legion of people all around the world that came in and watched me do what you just watched me do this month. Call everything before it happened, give it to you on a daily chart, and then we sit and watch it. In everything except for dollar index trading to that high yet. But I told you in the last recording that you can stop, and I gave you the science behind why I was telling you that, and it was perfect to the tick. Okay, again, come on, man. So the old man hasn't lost it. Okay, the stuff works, and when you learn these things, no one can take it from you. They can try to talk all they want about how it's this, it's that, it's somebody else's stuff, whatever. They don't have any proof of that. It's just them trying to show opinions and trying to project their insecurities because they don't like the fact that you can do things that they can never do. Unless they use my stuff, they're not going to be able to do these types of things. They're not. They're not going to be to the tick. They're not going to be precise about where the draw on liquidity is. They don't know where the market's going half the time. And they're all looking at the wrong things, but they're placing faith in these things as this is the real secret. The real secret is you have to look. You can't just look at a candlestick like I'm showing you here. You just can't look at a candlestick and know what's really going on. Well, why did this thing just all pan out again on a daily chart? You guys complained and said that I can only do this on 1 minute charts, and somehow I'm faking that. So how did I fake the whole daily ranges for a month? How did I do that? Come on now, over $500,000. Do all the contract measurements and what was afforded to you in terms of profitability. $500,000 given to you for free. Okay. No Discord membership, no PayPal, no tips, no super chat, you monetization and chats. None of that stuff. None of that stuff because the old man's padded out. Okay. These pockets are bricked up. I don't need nothing from y'all. Okay. That's why I'm not in a hurry of putting that book out for sale because some of you think I need that to get groceries. I don't need it. I don't need it. So here's the favor, okay? I'm of the opinion, okay? I'm of the opinion that a couple years ago when I mentioned Christ and gave him honor on Resurrection Day, I had a enormous hit on the channel. And about a month or so ago, I also did a live stream on a Saturday morning. I didn't even tweet it. I didn't say I'm going live. So no one knew unless you were subscribers. Okay. And about 7 minutes into the stream, I had over 50,000 people watching the stream. In less than 10 minutes, they all dropped off and it only showed like 1,600, 1,800 people. Okay. So my question to you is, what do you think's happening? What do you think's happening? It's one of the two. Either they don't like the fact that I'm talking about Christ, and I don't care if they have a problem with that. I don't care. Like I don't need that over now. I don't need it. I don't need YouTube. I don't need that. But I'm not going to shut up about him. I mean, he's the whole reason why I know what I know. If he didn't give it to me, I wouldn't be able to talk about it. I wouldn't be able to show you before it happens, proving it, and I wouldn't have been able to communicate it to the world and people all around the world making millions of dollars trading with it. Difference, folks, not just teaching it. Okay, they've pocketed with real trades, documented, verified. Hello, holla. I got some people upset, but it's too late. Cat's out of the bag. Even if they vanquished my YouTube channel. And what if I got on an airplane and I'm never getting on a plane, by the way. But what happens if I got on a plane and somehow it didn't get to my destination? There'd be all kinds of conspiracies. They got him. They got him. They're not going to do things like that because to do something like that would put a big bulletin board on, they silenced me. Okay. So they do it in subtle ways. They want me to feel less inspired to do it. And I'm of the opinion I want to test something. Okay. Also, I kind of want to leave this whole ICT thing. Okay. The channel will stay up. This all the videos are going to stay there. Okay. My YouTube channel stays titled The Inner Circle Trader. So many people are coming at me saying, well, if you're trying to leave ICT, why don't you just give up the name? They would love nothing more because then they could scam the entire world. Okay. They want my website, they want my name. But see, here's the thing, I'm doing business as. So that's my identity. It's me. Okay. And that's going to stay that way. That's why the YouTube stays there. Okay. I don't care what it makes. It doesn't make really all that much money. But the point is it's doing business as the Inner Circle Trader. So in relationship to what I suspect may be going on, and also to leave the identity of ICT because I don't want to be defined by that. I'm a whole lot more than three letters. And I'm not trying to say that pompously or arrogantly. Like, I think there's some depth to me as a person that's outside of trading. And I kind of want to have a little bit more freedom to talk about other subjects and trading, but not through the lens and perspective and persona of ICT. So, what am I getting at? I want to start another channel away from the whole ICT thing and kind of like show you, a different side of me where you get to see me actually. Notice that you don't really see me on this channel. It's like a faceless channel. And that's why a lot of you thought for a long time that I was AI, and that's not true. But I I want to kind of like share things with you. Also, give you a different, more grassroots approach to trading using my stuff, and not be so performance based and try to hold your attention because I think I got enough people to pay attention now. And I also want to compare and contrast because I know that somebody's getting what I'm collecting and I'm not getting my fair share. Let's just say it that way. So if I'm going to do it, I'm going to ask you all to subscribe to it. When I create the channel, I'll tweet about it. I'll put a link on this channel also, and I'll mention it in a video. And then after that, I won't do any more updates to this channel. All my future work will just simply be on the new YouTube channel. And I want to compare and contrast the growth of that one versus this one because I'm getting anywhere between 25,000 and 40,000 new subscribers every single month on this channel. But the views are strangled. How's that possible? It's called shadow banned. Okay. And like I said, I don't need it for the money. I just want to be able to say, I told you so. Because there's no way that somebody grows that many new subscribers and then the views still go down and they never reflect the real thing. So that's another reason why I left the comment section open recently. Because if you're watching the video, do me a favor and just say anything you want to say. Just don't be rude. Okay. You can say I saw the video, or if you didn't like something in the video, just say I don't care. But I want to be able to see if you watch the video. I want to see between the comments versus the number of people that are watching it. I know some of you are never going to comment because you're probably a teacher of my stuff, and you don't want the people learn from you in another country that don't know about me. That you don't want to blow that because they'll see you post on my channel and be like, "What in the world? We're paying you for this guy to give it out for free?" Yeah, exactly. So I'm like the golden goose that everybody wants to hide, but I keep putting myself out there in Times Square in New York broadcasting. So here it is. If they ever take away YouTube from me, I have other ways I can come out and talk. But I just think that I want to leave this whole ICT thing. I'm getting older. Um, my grandson is adorable. He's growing up fast. And I know eventually he's going to go on the internet and he's going to see and hear me performing as that persona of ICT. And I know that that's going to influence him. And I don't want that. I want him to see, pop up in a way that I'm a little bit more proud of. Not that I'm not thankful that the Lord, obviously blessed me, but I'm tired of being Elijah in trading where I'm mocking everyone and telling everybody their stuff is garbage and trash and stuff. I just want to be, I still believe it's true. Don't get me wrong, but I don't need to keep saying it. You know, I just want to walk a different walk with all of you and show you who I am as a person without that ICT mask. Because it takes a lot of effort, to do that kind of stuff, and then later on have to repent for doing the things. And you don't hear me cussing now because I told you I don't want to do those things. And that's all performance art to hold the attention of new viewers or crowd building. And it's nothing short of like the dude that plays Reacher. Okay. Um, I'm certain that he's not going to carry himself like that, in front of his kids and stuff. The things he does in his show or his, his series on being, Jack Reacher. And the same thing has been like that for a long time. Using Inner Circle Trader is the longest running persona I've had. I've had all kinds of other personas, and it's just I'm tapped out with it. I'm bored with it. It went way beyond what I wanted it to become, and it's defined who I am. And I got people in my family. They call me that. It's like, come on. My close friends call me ICT. Like, I don't like that. Like, it's tiresome. So what I want to do is kind of like migrate away from that persona, and I'm always going to obviously be that guy, but I don't want to have to be held to the expectation that I have to perform like that guy. I want to be able to talk to you, like a an average person, and just say, hey, look, this is my opinion about it. I'd like to know what you think. And this is also the things I do in my life too. Like I do these things, I do other stuff, and maybe that's not interesting to you. Okay, maybe it's not so as exciting, and you might say, "Well, I'm not interested in that. Nobody cares about that." I don't care if you don't care. I'm not doing it for you. I just twofold reasons. Number one, I want to prove that I'm shadow banned. Two, there's a lot of you out there that want to see a different side of me where like you'll see me talking to you and I want to show you some things that in the world that I think is important and I think that's useful information and I think it'll be a different experience. I don't think it'll be a bad one, but for the people just simply here for trading knowledge and they want to take notes and stuff like that, I'll have lectures and talking about in trading. So I'll have it segregated. Everything that's market related, there'll be a playlist that you can go right there. But anything that's not market will be in its own little playlist. That way, everything's easily organized because all this stuff on this channel was just like a big information drop of here it is, boom, there it is. I was building a huge encyclopedia collection of my stuff and logging things by date and time, by experience of what the market should or shouldn't do. And that's my track record. That's my track record. You don't get to see my finances. You don't get to see any of those things. I don't show the broker statement or broker. I don't show broker statements either. You've seen broker statements. I've logged into live brokers and done that before. It's on this YouTube channel. I don't know why you guys pretend it ain't there. But I don't have an introducing broker relationship and I never would. And I have so many brokers reaching out to me now in email all week long, and all of them, and they want to have an affiliate deal with me. And I don't do affiliate marketing. I don't do it. I probably could make lots and lots of money doing it, but you know what that does? That buys my opinion. And it's not real, it's not organic then. And I just can't live my life like that. Like I can't do that. And I know there's a lot of you out there that make a really good living doing affiliate marketing. And I'm not talking down to any of you because a lot of you are my students. You've piggybacked on the popularity of what I've built and what the Lord's blessed me with and shared with the world. And that's cool. I got no problem with that. I got no problem with that. But me individually as a person, I just can't do it. I can't do it. I feel like I would be prostituting what I was gifted with, and I just don't wanna do it, but I don't wanna stop sharing. So, I'll leave that up to you. Obviously, there's gonna be probably a very, very slow growth on the channel in terms of followers, but again, I do this for free, folks. I don't charge you anything, and I don't really ask you for anything. Like, I don't ask you for nothing, but this is what I'm gonna ask you for. Yeah, I would like for you to support the new channel just simply by subscribing, and whatever I post, just try to leave a comment because I wanna see, is it gonna happen in the new channel? Or am I gonna see this explosion in viewership that this channel's not being allowed to show? And for that, I will greatly appreciate your participation in that part. And I think I'll find interesting ways to hold your attention and teach you some stuff. There's a lot of things outside of trading I think that you would be blessed with, and I'm not talking about Bible stuff too. I do want to go sometimes into that, but I don't want to force it on traders because I know a lot of you don't have the same faith as me, and I don't want to be ignorant and hold you hostage, and knowing that I might say something trade related, but you have to listen to things about what I believe that are outside of market trading. So I'm trying to be more friendly to the viewers so that way you can have better control on what content you're taking in by me as the content creator, but also helping me in regards because your time invested in this stuff obviously is a huge commodity expenditure, but also equally me spending my time for free sharing something that I've made millions and millions of dollars with that you're not entitled to. That's a big capital expenditure on my part too. I'm spending my lifetime on strangers. And I've over the years seen people literally spit in my face using my stuff and then be disrespectful to me like they had a voice before me giving it to them. It's crazy. Like it's literally crazy. But in this realm, I've always invited drama. I've always invited arm wrestling matches. I've always done that stuff. The new channel, I don't want any of that kind of stuff. So if you try to go over there and you try to be problematic or whatever, um, you'll get blocked and banned. Okay, and because I don't have any interest in doing that on that channel. But I'm out here on Twitter. If you want to bark, I'm here. Just cock your leg and see how long it lasts. Until I talk to you next time, enjoy your weekend. Be safe. I don't know what's coming up this week. My wife's taking another trip. She's taking Caden, going somewhere. I don't know what they're doing. Um, so it's going to be just me and a girl. So I don't know what I'll end up doing next week, but I'll probably be spending time with you. I'm not doing live streaming anymore. People are asking all the time, can you go back to live streaming? I'm not going to be doing any live streams. Okay. That I'm not going to do. Um, even with the new channel, I'm just simply not going to do it. So I think that there's some changes coming. Some of you may not like the changes, and that's okay. I can live with that. Um, some of you won't want to do the migration to the new channel. That's okay. I can live with that too. Um, but I know enough of you will, and that's okay. That's the core group I'm talking to, and I think there'll always be a core group. And I hope that you get something out of that experience with me because I promise I got some really really cool things I want to share with you. And there's a whole lot more things to life than just simply making lots of money in trading. Lots of money in trading is fun. Lots of money in trading is a blessing, but there's also some things that I think that would really enrich your life. And I think if the Lord gives me more time to share it, that you'll be richly blessed for it. Till I'll talk to you next time. Be safe.